I've seen doctors who have 10 days of hygiene and they're producing $700,000 a year. And I'm going, oh my gosh, we really need to dive deeper into this practice. Is the hygienist talking about the issues? Is the hygienist teeing up the dentistry? Does the doctor have case presentation issues?
Tracking case presentation and case acceptance. Ideally, you want to see over 80%. That would be an amazing practice. Based on dental intel and some of these stats, average is under 50% acceptance. And that points to an issue with you could be over-diagnosing and the patient doesn't trust you, or it's just poor soft skills.
When you're talking to a dentist, what numbers do you look at and what can the doctors look at to make it better?
Production, collections report, adjustments report, and AR aging. Those are KPIs that really tell us what series of questions I need to dive deeper into.
Are you a dentist who's striving to build a more thriving, profitable practice without feeling overwhelmed by the numbers? Hey, good news, there is a better way. The Academy of Dental CPA member firms know dentistry. In fact, it's all they do. Our members are experienced CPA firms who specialize exclusively in serving dentists across every stage of ownership. From startups to acquisitions, to optimizing associate income, to advanced tax strategy, practice growth, and transitions, we're here to support your financial success. When you work with an ADCPA member, you get more than a tax preparer. You get a strategic partner, someone who understands dental industry benchmarks, overhead management, collections, dental insurance, compensation models, and all the unique business challenges you face every single day. We bring clarity to the business side of dentistry. While you focus on clinical excellence, we ensure your financial foundation remains strong with advisory that turns data into confident decisions. Join over 11,000 dentists nationwide who have a financial expert in their corner. Visit ADCPA.org to find a trusted dental CPA near you. That's ADCPA.org, because your numbers should work as hard as you do. Dentists, here's a quick question for you. When did you sign your PPO contracts? 5 years ago? 10 years ago? And has anyone ever gone back and asked for better rates? For most practices, the answer is never, which means you're still getting paid old rates for today's work. The insurance companies love that. Well, PPO Advisors doesn't. They go to the insurance companies and negotiate better rates for you. Their clients see a 20% fee increase on average. Same patients, same work, more money. They've done this for over 2,800 practices, adding $37.3 million in revenue. It starts with a risk-free PPO profit analysis. They check every fee schedule and show you the money you're leaving on the table with no pressure to go further. Visit PPOadvisors.com today. That's PPOadvisors.com.
And hello, everyone, and welcome to another edition of the Art of Dental Finance and Management podcast with Art Wiederman, CPA. I'm your host, Art Wiederman. Welcome to the podcast. We're recording on a beautiful summer day in August of 2026. And one of the cornerstones of this podcast has been to help doctors and our listeners understand the numbers of their business. I mean, all of you went to dental school because you loved being a dentist. You loved helping people. You loved building things. That's why you went to dental school. A lot of you, if you were asked to say, do I really have to run a business? Well, you do have to run a business. And my guest today is one of our members of the Academy of Dental CPAs, Kevin Bray. He's out of Bellevue, Washington, and we are going to talk. I think we're going to geek out a little bit on numbers. Not too bad. Don't hang up the podcast. We're going to give you lots of really good information information about what you should be looking at P&Ls, what you should be looking at as far as KPIs, key performance indicators, metrics, so that you'll have a better understanding of what your CPA or financial advisor sends you on a monthly or a quarterly basis and what's in your production report. So we'll get to Kevin in a moment. First of all, I want to thank everybody for listening. Our statistics just came out and we are up 15% in our viewership. Thank you to my wonderful producers, Kevin Henry and his team. Fabulous job that they do with this podcast every week. Please follow us on Facebook and Instagram and TikTok, and we have a YouTube channel. Please like us. We would really appreciate that. I want to thank my wonderful sponsors, the Academy of Dental CPAs, which again, we're going to feature one of our great members today, Kevin Bray. This is the official podcast of the Academy of Dental CPAs. Also, Interview, which is an amazing clinical device that helps dentists find internal mobility issues in teeth below the gum line that the traditional X-ray and CBCT can't find. Go to www.interview.ai and PPO Advisors. If you are having problems navigating the world of PPOs and insurance companies, you need a 4-year degree to understand that. Shelley DeGroff and her team are outstanding. www.ppoadvisors.com. Before I get started with Kevin, I need to talk about my dear friend, Paul Woody. Paul Woody was the founding member of Woody & Associates, one of our Academy of Dental CPA members. You might have heard him speak. Paul and his son Grant ran the dental CPA firm Woody & Associates out of Oklahoma City, Oklahoma. We sadly lost Paul last month. Paul was an iconic member of our organization. I met Paul probably 20 years ago. He is just someone that commanded respect and attention. And the thing that I loved about Paul Woody is the fact that he really pushed for dentists to be entrepreneurs and the private fee-for-service practice, if possible, of dentistry, which I know Kevin and I are going to talk about today. Paul was just a classy human being. Helped people. I mean, Paul had helped me with some client issues. He had a particular specialty with Social Security benefits, associateships, valuations. He was very well versed in valuations, but just an incredibly wonderful human being. And to Paul, to Paul's family, his wife Linda, to Grant and Carrie and everybody in the Woody family who I absolutely love, from the Academy of Dental CPAs and from myself, our deepest condolences for your loss. We will all remember and think of Paul Woody as an iconic member of our group. All right, so before I start crying, let's get to my guest today. Kevin Bray is a principal in the CPA firm, the Dental Accounting Group, with member of the Academy of Dental CPAs. Kevin is in the great Northwest out of Bellevue, Washington. Welcome to the Art of Dental Finance and Management podcast. Kevin, how you doing?
Hey, Art. Thanks for having me. Yeah, from the Pacific Northwest, and I watch your show. Happy to be part of the ADCPA, so I'm really looking forward to our conversation today.
We're going to get some really good information out to our listeners today. But I've learned a little bit about you. We've gotten to know each other. Your group we'll talk about that in a little bit, kind of came together with Maggie Boyle and Sam Martin's group up in Washington. And I've gotten to know you and your dad, Brian. And I have found out that you started investing at a very young age. Tell us a little bit about that.
Yep. I've always been fascinated with companies and investing. And I have to say, third grade was when I bought my first stock. And I think it's because I was sitting in front of the news or TV and the stock ticker was going by the screen. And I saw Costco and Microsoft. And they explained, now's a great time to buy. And I went to my dad at the time and I said, Dad, I really want to buy Costco stock. Can you help me do that? And he was like, you're in third grade. Why are you asking me about stock?
You should be out playing with your friends.
This is such a core memory for me. I remember we went to Charles Schwab, and back then, this was like kind of early internet days. And he set up a for benefit account for me, and we talked to the broker. I picked Costco, and then I used my birthday and Christmas money for the next handful of years. And just being a kid, you don't know any better, so you just buy the brands and locally in the Seattle area is Microsoft and Costco and Starbucks. So yeah, I did that up and through college, created a little nest egg and was able to sell those positions and buy my first house. So
That's amazing. I hear Costco is still a company, right?
well, I only own Costco through just ETFs now. I don't own
Sure.
Costco stock directly since 2014, give or take.
Well, you don't know this, Kevin, but my audience does. I love telling this story. The way I got into my first house, I've been married to my wife, Lynn, 41 years plus. The way we got our down payment was a combination of a little gift from my mother and my wife going on the TV show The Price is Right and winning $10,000 in
You're kidding.
1986. And that's how yep. So true story. I love telling the story, but we got much bigger fish to fry today. But that's
Oh man,
great. So
I'm gonna have to
yeah,
circle back on that offline to ask if you have the VHS recording of it.
I actually do have a VHS, and you get to see me with dark brown hair
That's
and a lot
awesome.
younger and maybe a little thinner. I don't remember. It depends on the week. But Kevin, tell us a little bit about your professional journey and how you got to love working with dentists.
Yeah, definitely. It's the long and short of it is I grew up in the family business. There's pictures of me in a stroller in the hallway at my dad's old firm. It was in my blood. I grew up in it. I was always around accounting and the dental connection way back. It was my grandfather who was a dentist. So my dad started a small dental niche in dentistry, but it was very small. It was a traditional practice, wasn't purely dental focused at that current time in the 90s. But about 10 years ago is when I partnered up with Brian to launch Dental Accounting Pros, which, as you know, later merged with the dental group with Sam and Maggie to turn into the Dental Accounting Group, which is the current iteration of the firm. But we launched Dental Accounting Pros at the time in the Washington market because we saw a need for quality accounting. At the time, we were only a tax-focused firm, and it was like, DIY books or third-party bookkeeper who didn't understand dentistry. So we always get these accounting records mid-year or year-end that just didn't make sense. It wasn't a dental specialized chart of accounts, and it just made the process of advisory just hard. So we saw a need for quality monthly bookkeeping. So we launched Dental Accounting Pros to meet that need in our market. And yeah, the rest is history.
Well, you guys have done a great job. And if you go on their website, which you'll give that out in a little bit, there's just all kinds of great tools and articles and blogs. So let's jump into the conversation, Kevin. I mean, you get new clients, you talk to dentists, you look at a financial statement for the first time, okay? And it's like you can spot problems in a dentist's financial situation in their practice probably in the first 30 to 60 seconds. So you look at a financial statement for a new client. What are you looking for? What kind of questions are you asking yourself about this practice? And do you want to ask your new client?
Yeah, definitely. So I have a uniform process to do a deep dive, and it really starts with the accounting as the foundation. So I request third-party access to QuickBooks Online and do an assessment of the books. And then from there, I'm able to link it to our benchmarking tool called Fathom. And so I do my best to map their existing chart of accounts into our standardized. And from there, it allows me to benchmark, all staff expense category, facility expense, operating expense, clinical expense. You really have to start there. Good bookkeeping is the foundation, knowing that what is actually entered is factual. And then from there, I'll look at percentage of revenue. Staff category is, of course, the biggest line item. I'll look at clinical supplies. But for the most part, segmenting the staff component is my first step. And again, that's just high level with the profit and loss statement. It's really just the first step in the diagnostic process to see where some issues might be in the practice.
Yeah, because that's the team salaries are the biggest expense we have in the dental practicing, and we're going to get into a bunch of that. So you've told me, over 200 dental practices. What kind of trends, we're in mid to late 2026, what kind of trends are you seeing? What's happening in the practices that you're benchmarking? Just kind of as a 35,000 foot overview.
Yeah, and that's the one nice thing about being specialized and merging with the dental group and now having, upwards of almost 30 years of data is it allows us to do in-depth analysis year to year to see what, revenue expense trends have looked like. And we're actually working closely with the WSDA in sharing a lot of that reporting to kind of build a better picture. I'd say in the Pacific Northwest, we had a huge issue with cost of living and staffing. I know there's been staffing challenges across the country, but especially Washington and the West Coast. I'd say between 2020, the pandemic era up until about 2025,
Yep.
it was really hard to compete and retain hygienists in urban markets just because cost of living. And at that same time, reimbursement rates, they had incremental increases, but they kind of stayed flat. And so for the hygiene department, we saw profits eroding significantly. And there was a downward trend from overall profitability for urban practices in our state. The good news is we've seen a bounce back since about 2025. It's turned a corner. All revenue and profitability is uptick. So that's good to see. I think market dynamics are stabilizing a little bit, but I'd say it's a tale of two cities or, two markets. In Washington, you have west of the Cascades, east of the Cascades. And I see a lot more practices thriving in suburban and rural markets just because cost of living, and you're able to, have similar reimbursements and fee schedules as you would maybe in an urban market, but then your hygienists are 20% less, in terms of payroll cost.
You nailed that. And it's been that. I mean, it's more these days. I mean, since the pandemic, we lost, depends on who you talk to. And I mean, I interviewed the president of the American Dental Hygienists Association several months ago. And yeah, the number is anywhere between 8 and 12% of the hygienists in the United States left the profession. They're starting to come back, which is good news, more hygiene schools and things like that. But yeah, I mean, the two biggest challenges you and I both know, Kevin, are finding and retaining good team members. And we've talked a lot about that on this podcast, and also PPOs. But I want to get into some of the benchmarking as far as production. I mean, I've taught for years, and you and your dad, I'm sure, have taught for years, that you can cut expenses so much in a dental practice, but it's not going to make as big of a difference as increasing the production. So talk about some of the benchmarking that you use. Let's start with the hygiene department. What are you looking for when you're talking to a dentist on a call like this, or in your conference room, in your office in Bellevue? What numbers do you look at, and what are you looking for in hygiene, and what can the doctors look at to make it better?
That's a great question. And for me, I'm a data guy. I need the data in order to provide the best advisory. And so high level, I always recommend starting with the goal planner we have on our website, or using our benchmarking report to kind of see the KPIs and the P&L. But to really dive deep on the production side, I need to see patient management system reports. So the reports I like to see are production, filtered by provider, filtered by procedure, current year to date, ideally broken by month, but just the whole calendar year to date's fine. And then prior year as well. And then along with the production reports, I want to see collections report for the same period, and adjustments report, and AR aging. So the production report is key because it allows you to segment what does production look like per provider. So your hygienists, your doctors, owner, doctor, associates. From there, you need a couple more components. You need to know their staffing model, if they have full-time hygiene, how many columns of hygiene are they running, and you build how many doctor production days or columns per year. From there, it's a math exercise. You're using the production to factor in what does doctors' daily production look like, and hourly chairside production. Those are KPIs that really tell us, what series of questions I need to dive deeper into. For example, hygiene dollars per hour in terms of clinical should be at least 150, which equates to 1,200 per day. And that's adjusted production, which is, collections essentially. Doctors should be targeting closer to 500 an hour, which equates to, 4,500, 5,000 adjusted production per day. And those are definitely goals a bread and butter GP practice should be striving for. And if you're below those benchmarks, then you need to start asking some questions about, are there holes in the schedule? Are SOPs efficient? Does the hygiene department follow the doctor's practice philosophy? Diving into the D codes with fluoride and, whitening and these other components, and really getting into the weeds on some of these issues. Or maybe it's a clinical side on the doctor's part. Maybe for a crown procedure, they're blocking 2 hours, and versus, as we know, some clients are more efficient and they can do closer to 90 minutes. And so all these questions arise from the math and the data. And it all comes back to having good data to start the conversation. The one thing I see is if a dental practice owner working with a generalist and, a non-ADCPA, accounting firm is they don't talk about anything outside of just a tax return. Or maybe it's like they get a P&L, but nothing segmented for dentistry. And so they never have those conversations about the production, the staffing model, what is a right size staffing model for their specific practice. And that's, one of the benefits of working with us and an ADCPA firm member is we nerd out about that stuff. We're obsessed with working with dental clients because that's all we do.
Yeah. And there's so many questions. On this one topic, we could spend the whole hour, Kevin, but one of the things I like to look at is how many days a week of hygiene do we have and what's the office production? And it's just, many, many years of just doing this. And I've seen doctors who have 10 days of hygiene and they're producing $700,000 a year. And I'm going, oh my gosh, we really need to dive deeper into this practice. It's like, is the hygienist talking about the issues? Is the hygienist teeing up the dentistry? Does the doctor have case presentation issues? I've watched doctors present cases in dental offices, and it's just like, I wouldn't buy it. I wouldn't believe what they say.
I'm glad you brought this up because this is a conversation we have all the time in terms of tracking case presentation and case acceptance. And if case acceptance is under, we ideally want to see over 80%. That would be an amazing practice. Based on, dental intel and some of these stats, average is under 50% acceptance. And that points to an issue with soft skills, but it's kind of could go two ways. You could be over-diagnosing and the patient doesn't trust you, or it's just poor soft skills in building that rapport and, the understanding that this procedure is important for your health. It's not just me trying to get more money from you. Yeah. And so, if the case acceptance component is, under 50%, that definitely is another conversation to go into.
And doctors, the one thing, I'll talk directly, to the doctors here. If you don't have a practice where you have built trust with your patients, that you present them with a treatment plan that in your ethical, professional, clinical opinion, whatever term you want to use, is what's best for their total health. If they doubt you on a regular basis, you really need to take a step back and say, what am I doing here? What am I doing wrong? Ask your team. How many times, Kevin, have you talked to a doctor and said, have you talked to your team about what they think about your case presentation? They'll tell you because they respect you, right?
Yeah, and it's important to have the team aligned with the doctor. We've seen situations in some offices where doctor will present the treatment plan, and the second they leave the operatory, the hygienist turns around and says, oh, you don't really need that.
Oh, go on.
This is so important to have your whole team aligned with you as an owner and your practice philosophy. So every touch point with that patient is just a redirection to this is the best care for your health. And, these are the reasons why you should pursue with this. I always, like with dentistry, I always look at it and I always like to provide analogies, but it's like for, hygiene and procedures. They're like the oil changes and the maintenance intervals on your car. And sure, some people skip those, but you increase this risk of, your engine blowing out or seizing or your brakes failing. It's like, do you want to be stuck somewhere with an infection or tooth pain on vacation? No. So you should have routine, good quality dentistry and don't put off those, procedures, at least in my opinion.
And I know, Kevin, that you spend a lot of time helping doctors buy practices, start practices, and things like that. We're going to get into that in a little bit. One of the things when I would work with a dentist, either buying a practice, because I'm a broker, I sell practices and I don't represent the buyer, but I still give them just some, if you'll excuse the expression, fatherly advice, is that the first thing that a new doctor, whether they're starting a practice or buying a practice or coming in as an associate, should tell the team when they first meet them is something to the effect of, everything we do, folks, in this practice is going to be for the total health and well-being of our patients, regardless of whether we get paid for it. And if you start with that, you're going to win that team over. It's what's the Johnson & Johnson commercial? Kevin, you never get a second chance to make a first impression. And I've said this on this podcast, and my audience, 8 years, knows I repeat myself. Drives everybody in my life crazy, but it's a very important point. I mean, trust is so important.
Yeah, and trust and respect is earned with time. And I love
Earned.
that line that you're recommending a new owner give, to the team, because with transitions, there's a lot of moving pieces. And of course, you want to limit change those first 90 days as a new owner. But like a new staff will give a new owner a chance. And it's kind of a wait and see. And then it's like that time aspect that follows it is you really earning that trust, with that new team as the new owner.
Let's touch on a couple of granular things. I know you said production per hour. Do you also look at production per visit?
We do, but globally we focus on production by day, production by hour.
Okay.
Sometimes we will dive deeper into the weeds and look at production by visit and actually specific D codes. But just globally, we start at the production per day and then, show the doctor the math of, okay, you want to increase, revenue and profitability by, $250,000 this next year. How many new patients do you have to achieve new in the door per month to see that? And that's an aspect we built into that goal planner, and some other tools we have is forecasting based on new patients. And that's one thing people don't put a lot of focus on, in my opinion, unless they're working with a great marketing team and they have dialed in operations, is new patient growth.
Yeah, talk about that. That's one of the things I want to touch on today.
That's net new patients. I see practice owners not realizing that there's natural patient attrition. People leave for a variety of reasons, moving, new job. And on average, we assume 10 to 15 per month. So we use 12 as a number of average patient attrition. So if you want to grow your practice and you're not maybe adding, implants or Invisalign or more procedures, and it's just really a volume part of the equation, then you need to factor in the patient attrition and target that, 30, 40 new patient a month. So your net is growing.
Because you're going to have patients that are going to move. You're going to have patients, sadly, that are going to die. And unfortunately, Kevin, and you see this, I'm sure, a lot, we've talked about this, is when a patient has not been into the office in the last 18 months, they're no longer, as far as I'm concerned, a patient record of the practice. You have to take them off. And this is what happens is a patient comes in, they have a good experience with the doctor, and then nobody follows up with them. Nobody follows up on clinical treatment. Nobody follows up on recall visits. And the next thing we know, as long as the patient isn't having pain, oh, I went to the dentist. Well, when did you go? Oh, 3 years ago. Well, you have no pain? Well, that doesn't mean you don't have problems, but they don't know that. So those are things we talked about. I want you to take a minute. You and your dad are one of the newer members of the Academy of Dental CPAs, which is my mothership. We formed this group 25 years ago around 2 water pitchers in a room in Scottsdale, Arizona. And, one of our earlier members were the dental group, which is Maggie Boyle, who's one of my favorite humans on the planet, and Sam Martin, who's also one of my favorite humans. Sam was a college football player. We talk football all the time, and he was kind of the tax specialist guru. So talk about what ADCPA has meant to you.
Yeah, so many good things. And I preach about the ADCPA when I go and speak at events, dental societies, universities, just talk about how much of an impact and difference it is compared to other trade groups in just elevating the dental CPAs just because we share so much information. I mean, I've been to, BNI groups, other accounting and CPA conventions, and you don't have the same level of best practice sharing and everyone caring about each other and the camaraderie. Like the ADCPA has been amazing just in terms of sharing information. Everyone kind of has their, cards on the table. This is what we do. This is our approach to working with dentistry. This is what we're seeing in our market. And so really everyone within the group cares about each other's success. That's kind of how I see it. But it's been amazing. I've only been a member of the ADCPA for, going on 5 years, I think about 4 right now. And I look forward to, seeing emails come through from members and just sharing information that way. We have that, channel. And then I of course, look forward to our summits, twice a year just to see everybody and talk about what are some new AI software applications on the horizon. How are you, approaching, this with clients, X, Y, and Z. It's a great group of people.
It has been so much fun. Our president, who is, if you don't know him, you should know him. He was doing over, seminars, webinars for over 10,000 people. He's one of my dearest friends in the whole world. Is Alan Schiff. Alan and I would just stand in the corner at one of our meetings. There's 100, 125 people, and we just look at each other and say, look at what we built. And it's very, very cool. So if you're not working with an Academy of Dental CPA member, you should talk to the one in your area. If you're in Washington State, you should give Kevin a call. Let Kevin give out his information in a minute, but go to our website, which is www.adcpa.org, www.adcpa.org. You can click on the members tab and it'll bring you to the list alphabetically by state. And sorry, you're at the bottom, Washington. That's the way it goes, but that doesn't mean you're least important. So if you have any questions about metrics or anything we're talking about today, Kevin, go ahead and give out your contact information and your website and email if you'd like.
I always recommend going to our website, which is dentalaccountingpros.com, or if you Google search Dental Accounting Group, we'll pop up. Feel free to email me as well. I have a few emails. My main one is kevin@dentalaccountingpros.com. But yeah, check out the website. We have a lot of great resources. I've built our metric surveys, our payroll surveys, our goal planning tools that we now host on the website. And we have a lot of other exciting proprietary tools internally that we use for our practice consulting.
Which is a great lead in to our next topic, because I know on your website, and I've gone through your website, you have something called a Dental Accounting Group Goal Planner. I think there's 5 steps that you use to help clients with their profit plan. Kind of maybe walk through those and kind of talk about how you use them with your clients.
Yeah. So the goal planner is really a slimmed down version of an existing consulting tool we use. It doesn't factor in production reports. It's really just high level, and it's intended for clients and prospective clients alike to go on there and they can enter in their buckets of expenses. And I have it very straightforward and simplified where you're entering in your total staff expense, and that's excluding owner, doctor, and associates. I want to see that separated under other expense just for a benchmarking purpose. You're entering in your facility expenses, clinical expenses, operating expenses. And then after that, it automatically populates and shows you benchmarking for your revenue size of practice and how you compare. So it's a good diagnostic gauge to kind of see how am I doing based on high level with the numbers. And then I've built some forecasting elements into it where you can go down and factor in, okay, a patient is worth $800 a year to me, and you can enter in how many new patients you want. It'll show you what that looks like on a high level forecast, profitability and revenue and the different changes to those, operating expenses and staff expense. And then you can customize it further. You can enter in owners, salary, associates, discretionary expenses after that to kind of get to a, estimated EBITDA number. But it's a great tool. I recommend everyone using it just to supplement their annual planning. And that's another thing we preach about is, at least on an annual basis, reviewing your business plan and putting out goals for the following 4 quarters. I'm a big planner. I love the data and helping the next generation of owners just kind of wrap their heads around setting goals, hitting goals, and planning. So yeah, this resource is kind of a starting point. I recommend all dentists start there, but really the bells and whistles are when you reach out and talk to us and we can dive deeper in.
Hey, it's Art Wiederman here. You know I don't recommend products lightly. I only share solutions that can genuinely impact your practice's clinical outcomes and bottom line. That's why I really want to tell you about Interview. They've developed an FDA-cleared technology that measures internal tooth mobility, something that traditional methods just can't detect early enough. Here's what that means for your practice. You can identify cracks and loose restorations before they become emergencies. That means better treatment planning, fewer surprises for your patients, and more predictable case acceptance. Interview integrates right into your existing workflow. No complicated processes, just clever diagnostic information when you need it. it. If you've been looking for a way to elevate your diagnostic capabilities and strengthen patient trust, book a demo at interview.ai. That's INNERVIEW.ai. Mention my name and you'll get $250 off. That's interview AI. INNERVIEW.ai. And then doctors, I ran my own CPA firm for about 35 years. And every January, I would put together a PowerPoint and I would say, this is the plan. These are my goals for the years. These are my short-term goals. These are my midterm goals. These are my long-term goals. And I'm sure, Kevin, you do something similar like that with your dental clients. And, do you want to add a new line of business? Do you want to start, you doing, clear aligners? Do you want to add CBCT to the practice? Do you want to add an associate? We're going to talk about that in a minute. All these things require a plan that a business does. And your team is your board of directors, because your team, and if you put trust in them, doctors, and you say, I'm thinking about doing this, and they'll give you the good, the bad, and the ugly. But if you just show up to work every day and you're on your side, I've had clients who the team will come up and say, Art, you got to talk to him or her. All they're doing is they're on Instagram all day long when they don't have patience. Well, that's not what you want to do when you're in the office. So, but you talk to your clients about that a lot. Hey, let's jump into some overhead issues. We talked about production. Let's talk about overhead. You mentioned dental team. What are some of the KPIs and metrics you're looking at for team salaries that you talk to your clients about? And maybe kind of expand on, what does it mean if those are higher than your benchmarked averages or lower?
Yeah, I love it. Getting into this component, because the biggest staffing model is the biggest leverage point that the doctor has control over. Of course, market determines wages, but what I see is not right sizing the staff model for the revenue size of practice or the practice goals. I see offices that are not doing $1 million in revenue yet, and they have 2 or 3 front office or administration. That tells me inefficient process or wrong people in the wrong seat on the bus. So that's really the first place I start of potential cost savings and right sizing the staff model. On the hygiene side, it's really a conversation of what's your compensation and benefit package if you do offer benefits, and is it competitive for your market? I had a conversation with a client a couple months ago, and we did a review comparing with our payroll survey. And it turned out their hygienists were $10 to $15 under the average in that market. And it's sure you're, getting great ROI, but in the back of their mind was they're probably looking, and yes, every employee, especially hygienists, are always looking and talking with their friends of like how they're getting paid. And so they decided to, in their annual review, preemptively increase salaries to be competitive, just to take that off the table. Don't even think about, going somewhere else. So those conversations come up, but on the flip side, if their hygienists are getting extremely overpaid, I love diving into the per day visit, estimating revenue coming in, the hygiene expense and profitability. And in Seattle, for example, just high cost market and reimbursement rates are pretty flat, is if there's one no-show that day or a broken appointment and you have a hygienist, over 80, closer to $90 an hour, that hygiene column is breaking even or losing money. So the staffing conversation, it's, some art, some science. The interesting thing is only about half of practices offer benefits. And even within those half, within our survey group, most don't cover 100%. So it's pretty easy to put together a competitive package to stay ahead of the competition.
It's really important to look at this. And that's a great point about undercompensating your employees. If people work better when they're paid better and when they're appreciated, and there's no way your client would have known that they were under market unless you were able to go to the 200 practices that you benchmarked, right? And said, hey, you're below market. And that's the big advantage of working with someone who understands the dental profession, like our ADCPA members. Let's get into some of the other expenses like lab and supplies. Those are 2 biggies. What do you look at when it comes to lab and supplies?
Yeah. So, of course, accounting records, we got to make sure that the source data is accurate. Of course, if we're doing the bookkeeping, we know it is. But from there, I look at the benchmark with the revenue size of percentage. And what I found is, I mean, most practices fall into their range with lab. It's most are around that 4%, dental supplies 5.5, give or take, maybe 6. But some practices still surprise me. Every once in a while, there'll be a practice where dental supplies, it's a mature practice, and dental supplies is over 8%. And in one case that comes to mind, they were over 10%. And it's not everybody, but every so often I'll see that. And right away I say, let's dive deeper into that. Have you shopped the market for, supply vendors? Maybe is it overbuying, not, being efficient with those purchase orders? Or maybe they should consider joining a group like a buying group like Best for Dentistry, which offers, DSO pricing with some vendors, right away. So we've done some analysis with that group in particular. We have a number of clients that use them, and there's been, cost savings. It's not a huge amount, but we're still talking about thousands of dollars net savings. So
Yeah, I mean, there's many groups out there that are procurement
yep.
groups. I've worked with Torch Dental. They talk about 15 to 30% save. I mean, I don't know what kind of savings you get with these groups. Let's say you have a $2 million practice, and say you're spending, what would you say, maybe 5%, let's say 6% on supplies. That's 120,000 a year. If you can save 15% of 120,000, I'm required by law to do math because I'm a CPA still, I think. That's $18,000 in your pocket, and you're getting the same supplies. So
Yeah.
these are the types of things that they need to be looking at. And then you always have the conversation about, should they get a CAD CAM technology and what is that going to save?
Mm-hmm.
And that's a whole nother, we've done podcasts on that too and stuff. So any other overhead like marketing or other overhead that you see that there's some things you want to comment on before
Yeah.
we jump into a couple of
We
other topics?
we track a handful of kind of core benchmarking. Of course, it's staff, clinical, operating, but specific to, I like to dive into marketing expense, revenue growth, and that's by practice size, and then also merchant service fees. Marketing expense is interesting. Of course, you got to spend money to make money, in my opinion, especially with marketing, but there's more art than science with it. Like I've seen practices spend, 2% of revenue, but meanwhile, their growth is not growing well. So I think marketing just changes so fast. It's key having a good marketing team and you're spending efficiently. Like just trying to DIY it and dump money into pay-per-clicks is not the approach.
No.
But
Please
practices,
don't do that. Please don't do
yeah,
that,
and
doctors.
I've seen offices do that. It's like they're like, oh, I can DIY this, and they're just lighting money on fire. So starting really with practice philosophy, what the ideal patient experience is, and just understanding like your business first. That's the first step of like marketing, and then from there, I recommend every practice using an outsourced marketing team, just because a dentist's highest and best use is clinical, is chairside. Right. Marketing, I'm a big fan of grassroots marketing, internal marketing, asking existing patients for those referrals and, the ideal patients, because as we know, birds of a feather flock together. And those internal, just asking is the cheapest marketing, and just kind of advertising. Of course, Google reviews, first and foremost, Google reviews at the top of the list. And as AI search has been evolving the past 18 months, SEO optimization on the reply to that Google review is super important. I see more and more patients and then leads finding their, vendor or dentistry, and even us internally, and they note the source as AI search.
One of my good friends in dentistry is Dr. Leonard Tao. Dr. Tao, he has what's called the Raving Patients podcast, and he is the national, as far as I'm concerned, the national expert on helping doctors with their online presence. And he'll be coming onto the podcast before the end of the year, and he's just amazing. And he basically says you need, I thought his number for a mature practice was about 100 or 120 Google reviews, and you don't want them to be 5-star, because if they're all 5-star, somebody's going to say something's wrong. 4.7, 4.8, 4.9 is okay. But I mean, you've got to manage your online reputation, because it's funny, Brian, when I lectured at the dental schools back in the 1980s and the 1990s and 2000s, we didn't have the internet. We had the yellow pages. So when I lecture the dental schools now, I have an old copy of the yellow pages that I've kept. I think it's turned brown by now, right? And so I hold it up and I go, okay, so how many of you guys use the yellow pages to find professional services and restaurants, and they look at me like I should be institutionalized. And I go, "Oh, you mean there's another way?" And one of them goes, "Well, of course, the internet." I said, "Oh, really?" So I mean, it's all about your reviews and your standing on Google. So those are things you talk to your clients about, right?
Google reviews. And I nerd out over marketing stuff and just I wear a lot of hats just on, at
Oh,
our
yeah.
firm. And so just talking to, practice owners, I go down these tangents and marketing, I love. The one thing I don't like, I feel like people are discounting the in real life marketing versus like digital. I feel like everyone's flocked to digital and digital is great, especially Google reviews and digital presence. But I still put value in like the grassroots marketing, door-to-door networking, sponsoring the local PTAs or sports leagues.
Absolutely. Get involved in the community.
In real life versus, digital. And a lot of the younger generations, like for me, it's common sense, but I think a lot of the like younger docs coming through who grew up in a digital age are kind of forgetting that, like the kind of in-person marketing aspect, So I put emphasis on that, especially this year.
Many years ago, Kevin, there was a commercial on TV for United Airlines. And the commercial centered around the manager of a whole group of salespeople of a company. And the manager was handing out airline tickets to like 30 different people. And his comment was, and somebody asked, "Well, why are we taking these trips? We could be selling." And his comment was, "We need to reconnect with our customers. We need to go see them face to face." So talking to your patients, asking them for referrals. I mean, it is the cheapest marketing there is. And, I lecture on this all the time about what are the verbal skills. So, and I know you talk to people in our ADCPA do too. I want to get to a couple more things before we have to wrap this up. I know one of the things that you help doctors with, Kevin, is when to bring an associate dentist on, how to bring them on. Talk about your process when you're talking to a client, their practice is going well, they get a lot of days of hygiene, they're getting a lot of new patients, they're working 4.5, maybe 5 days a week, and they're just really feeling a little burnout. Maybe it's time. Talk about what a doctor should be thinking about when it comes to bringing on an associate dentist.
Great question. And I get this all the time. And really the starting point is lifestyle and what are your goals and like what do you need, I guess, to make you thrive individually? Because not everyone just wants to make more money. Sometimes it's work-life balance. So really starting there and getting an idea of what their take-home goals are for pay is important when talking about bringing on another associate, because depending upon where they're at in their practice journey, I see some practices bringing in an associate too early. For example, if you're still doing under 1.5 million in revenue, collected production, you're a really busy solo doc practice, and I wouldn't say there's a case to necessarily bring in an associate unless the goal is to continue to grow. So you have to be very strategic about when you bring an associate in, scheduling, making sure that there's enough demand there to feed two dentists. I see a lot of owners bringing in a part-time associate starting one day. Like let's say, for example, you're a practice and a really busy solo doctor practice, you're about $1.5 million production, you're maxed out, hygiene's booked out 6 months, you need the facility to support two dentists. So if you have 4 operatories and you're like, I'm going to bring an associate, well, great. What does that schedule look like? You're going to add another day? You're going to scale back a day? And then you have to do the math on how is that going to impact, your bottom line. So facility is important. I recommend if you're building a new practice right now, at least 6 operatories, at least plumb for 6. 4, 4 is kind of was a standard for many, many years. Then 5, just because in case, for emergencies overflow. Now 6 is kind of what we're seeing or recommending. But if you're going to bring an associate and your practice is growing, you really need more than 6, operatories. So, and then from there, approaching it with associate contract, and if you're in Washington State and you're listening, please review all your associate contracts, current and former, because non-compete agreements are now void effective June 30, 2027. And there's actually in the law, it says employers are responsible for notifying their employees who maybe have those non-compete agreements, and any former employees who might be still subject. Let's say there's a 2 or 5 year clause and they're within that. It's on the employer to reach out to their employees to notify them. So all these associates out there. Now, non-solicitation agreements are still enforceable. You can't open up shop across the street and solicit patients or employees, but non-competes, it's going to be a brave new world after June 2027 in Washington. We'll see how it plays out. There's, risk for owners. I see it good for associates, maybe working at DSOs because they don't have, huge restrictions on where they can open up and practice now post June 30. But yeah, I'm glad you brought this up because that's one thing I'm finding a lot of people don't realize this deadline's coming up.
Yeah, that's important. And the other important thing is obviously neither Kevin, I don't think you're a licensed attorney, and I'm not a licensed attorney.
No,
and
not legal advice. Please refer to your
Here's a
qualified
disclaimer.
dental attorney.
Member
Disclaimer.
Member FDIC, ESPN, HBO, right? There you go. But our job as CPAs, number one, we know our lane. We do not give,
Yes.
legal. How many calls a week do you get, Kevin, asking you legal questions?
Oh
And
my
your
gosh. So I do a lot of the practice acquisition consulting by rep. I love doing that.
Yeah.
I love helping people, this new generation of dentists pursue ownership. And I get so many legal related questions, HR related employment practice questions. And it's so important that as professionals, we stay in our lane. I know enough to be dangerous and I know just technically what it is, but I always recommend, if it were me, this is what I would do, but you need to consult with your attorney or HR professional. A lot of questions with the letter of intent and purchase and sale agreement. They come up on these transactions. And that's why I always recommend working with a good dental specialized attorney is so important.
Which I'm sure you have several in the area, as all of our ADCPA members do, your go-to attorneys and different professional consultants. One of the nice things about working with an ADCPA member is we all have relationships with dental coaches or consultants. I know probably 200 dental consultants through 42 years of doing this work. And I always say, do you want to be a coach? Do you want to be a consultant? Do you want to be what do you want me to call you? But you work close. The great thing about understanding the numbers, Kevin, is that you can have a conversation with one of your clients' dental consultants who's in the weeds looking at scheduling and financial arrangements and verbal skills and all this stuff. And you can say, hey, by the way, consultant, I want to spend an hour with you and go over the numbers of the practice. That's really helpful too, right?
Yeah. And we collaborate with our coaches in our network in that same respect. We stay in our lane, but the benefit is behind the scenes, us and the consultant and the coach can go over the numbers, just talk about what we see from our perspective and, with a common goal of helping that, that doctor, that client.
Let's go back to the associate subject. Now we hire an associate. So what kind of conversation do our senior doctors have to be thinking about when they hire the associate a year or two into it about partnership or buying them out? If I have a doctor that's got a big practice and they want to cut back and travel more, you hire an associate, maybe you sell them a small part of the practice, and then ultimately they buy you out. Talk about some of the process that you go through in talking to your doctors as far as, okay, you brought an associate on, probably a pretty good chance, senior doctor, that your associate is at some point going to want to be an owner. Talk about that for a second.
Yeah, and this comes up all the time. And I see owners out there in the associates I'm working with, maybe on the buyer rep side, is the owner at the practice they work at has said, oh yeah, in 5 years, 7 years, you could buy in. And this kind of carrot on the stick keeps as a moving target. So I always think it's best that owner and associate have that conversation on the front side and actually have dates on the calendar and alignment on expectations. Because partnership's not for everybody. Partnerships have the pros and cons, and you really need to have alignment on personality, practice philosophy, the financial side. And what goes along with that is once you even agree to, let's say, associate, owner agree, oh yeah, we're going to partner together. Great. And the work just has started. Having an ironclad operating agreement, an understanding of valuation, how doctors get paid. Best practice is to form a new entity, having a new LLC that's partnership, and then units owned either individually or via side entity, and then having a tiered allocation schedule in the operating agreement where those partners are paid first of individual production. And then, profits in excess of that are distributed based on ownership. But big fan of partnerships, great economies of scale, especially as larger practices grow. We have a growing number of partnerships. I believe last I checked, we're working with 36 partnerships and counting. But yeah, there's lots of moving pieces. And I think people will go to coffee with their associate and have a handshake deal and think like, oh yeah, there's great, we're a partnership now. But there's just so many pitfalls and blind spots that need to be navigated with a good attorney and, CPA team to set up the partnership for success.
That's so important. And we hope that you get to the point that you're going to need an associate. I love, like I was saying, I love if I have a doctor that's getting within 5 or even 10 years of retirement, I like to bring the associate in. It allows the doctor to, and no offense to anybody 80 years old or older listening to this, but one of my good friends talked to me about the 60s are your go years, the 70s are your slow years, the 80s are your no year. On the recording of this podcast, I will turn 67 2 days from now. So I'm in the middle of my go years and trying to do that. So doctors, if you're thinking about that, you got a big practice and you work in and you think you've got enough money to retire, maybe think about cutting back, bring up somebody on. Get them in sell them a small piece of the rock. These are the things that Kevin and our friends at ADCPA talked about. I want to touch briefly on just kind of tax planning. That was not what this podcast was going to be about today. We're going to have some of our other ADCPA members on probably in November to talk about year-end tax planning from our group. But just high level overview. What do you do throughout the year for tax planning for your clients? Because that's an important part of what we do.
Exactly. And that's, I think, one thing different with, I know a lot of the ADCPA member firms do at least a mid-year tax projection and planning exercise. That's what we do. So with all of our clients, our baseline is we're meeting once a year, mid-year. We're doing a tax projection. We're doing a benchmarking report. And it gives us time to map out and take advantage if there's any reinvestment or equipment purchases that are going to be for the practice that definitely have a plan and a use. Don't just buy equipment for the sake of buying equipment, but that is placed in service prior to year end. Because if you're talking to, your equipment rep in December, you're too late. By the time you can buy it and you're trying to get it in that tax year, you can't place it in service in time. So we're doing those tax planning conversations mid-year, and then we do a year-end tax update as well, just to make sure that for our larger practices, especially that have above average double-digit revenue and profitability growth, that it's staying on track with, what we estimated for those tax payments. And then at that same time too, just determining, does it make sense to go S Corp or not? Washington's unique where we have a LLC, a PLLC, professional LLC, and it's best practice to form as an LLC, and depending upon the household adjusted gross income level, maybe delaying electing S Corp. S Corp's not a one size fits all. And I see some practices out there who maybe or associates buying a practice who are DIYing a lot of things and maybe seeing something on TikTok, initially going S Corp, but based on their income level, they're actually going to end up spending more on taxes being an S Corp because they were still within the QBID, range prior to phase out. So we have a lot of those conversations on the front side and then of a transaction. And of course, mid-year planning, and then also just staying up to date with changes like break room supplies now not tax deductible. I remember I was giving a presentation in Spokane last year, at the end of last year, and I brought that up in conversation how staff meals, break room supplies, technically going forward, not...
You use the word, Kevin, from a more experienced person. I've been out here a little bit. It's called theoretically.
Yeah, theoretically.
Theoretically, this is not deductible.
Yeah.
I mean, as you go along in your journey, you're going to have a book that you can write of stories of what people want to write off. Listen, I want to thank you so much. Any final comments you want to make? And I want you to give out your contact information again. And I'm going to give out ADCPA's website one more time.
Yeah, thanks for having me, Art. I'd say one thing I forgot to say earlier is the reason why I'm in the business I'm in. I love helping people who help people. Dentists, just by nature, they have a lot of stresses in their life, but it's in their nature to help people. So it's really fulfilling, at least personally, working with dentists, helping them alleviate some stress. And, I think they can accomplish financial success still in 2026 by working with an ADCPA firm member. The first step is understanding, the numbers, understanding what goals, what your practice goals are and personally are, and then making a plan and sticking to it. But yeah, I enjoy helping the next generation of practice owners. So if you are, 10, 15 years into your ownership journey, feel free to reach out. And like Art said, or ADCPA firm member in your market. If you're a associate thinking about buying or starting up a practice, reach out. Happy to answer any questions and make sure you avoid pitfalls and start out on the right foot. Go to our website, dentalaccountingpros.com, or shoot me an email at kevin@dentalaccountingpros.com.
And doctors, remember that we've got you covered pretty much in every area of the country. www.adcpa.org. I'll tell you, Kevin, we have about, and it changes, when people retire, people come on. I think we have about 9 or 10 of our 25 member firms are either father, son, father, daughter, mother, son, mother, daughter. And I know your dad, Brian. I've gotten to know him. I know your mom, and I know they're going to be listening. And so, Brian, you done good with your kid. He's an absolute peach, a gift to the dental profession. And it's been so much fun watching a lot of the dads in the ADCPA who are all of my contemporaries and friends. We've lost 2 or 3 of them. And then watching their children come up as the next generation of the Academy of Dental CPAs. That is just so much fun. But Kevin, thank you so much for your great information, expertise, how much you care about the dental profession. And stay with me as I take out the podcast, if you wouldn't mind. Folks, again, I want to thank you so much. Our podcast is growing every single month thanks to you. Please tell your friends about the podcast. Please tell them to like us. Please tell them to listen to us. We are here to do nothing other than to provide world-class information to help make your lives better. And I want to thank our wonderful, so again, follow us on Instagram, TikTok, YouTube. We have a great YouTube channel, Facebook, and please subscribe to the podcast on Apple or Spotify or wherever you get your podcasts. If you subscribe every other Wednesday when we publish, this one will be coming out in about 2 weeks. You'll be able to get the latest podcast immediately delivered to your mobile device or computer or wherever you watch your podcasts. I want to thank our wonderful sponsors. First, again, the Academy of Dental CPAs, my mothership, 25 dental CPA firms across the United States that represent over 12,000 dentists. Go to www.adcpa.org. Interview, go to www.innerview.ai for an amazing device that helps find internal mobility issues on teeth below the gum line that traditional x-rays can't find. And PPO Advisors, www.ppoadvisors.com. Shelley DeGraff and her team are absolutely remarkable. In fact, her podcast actually published today, which is August 12th. You should listen. It has some great information about that. Go to www.ppoadvisors.com to help get better reimbursements and just better navigate the ever-changing world of dental insurance. Kevin, thanks again for your time and your expertise. And with that, we will call it a podcast. That is it for this edition of the Art of Dental Finance and Management podcast with Art Wiederman, CPA. Thank you for listening, and we'll see you next time. Bye-bye.